Okay, here's the week 19th to the 23rd of May, starting with the Euro USD. You can see the obvious points of interest on the chart here, the 139.38 level, the 136.95 level, which we're at now, and the 134.81 level, which is way down here. There is also a small level just in here, which provided some resistance over the course of the last couple of days. This level has caused a lot of people to think that the market is going short. At the moment, I'm in two minds about this. We did take a long position on Thursday night, Friday morning, off this pin bar here. But when it closed into this candle here, towards the end of Friday, we closed out the position. We think we took a 17 pip loss or something on that, so no biggie. To get long on this again, I want to see a bullish engulfing candle coming up here to prove to us that we're actually going to reverse out this 136.95 zone. If not, then if the price comes back down here, then look for getting short back at 136.95 to 137, or alternatively the 138 level. And of course, if it crashes down here to 134.81 in sort of a couple of days next week, then you've got to be looking for some sort of reversal out of this zone here. Okay, moving on, GBP USD. This one, as you can see, it bounced out of this level just here. For me, after this down move here on cable, the jury's out on whether or not this is going to continue coming down short, or we are actually going to be continuing along from here. So what we can do here is to check the levels. The first level here to check would be the 168.93 level. If we get up to there and we see a bearish candlestick, then look to take that short, coming down to this sort of level, back down to these levels, down to the 167 level. If we immediately reverse here and come and break this level, then you've got to look to get in short around 167.38 on a retrace. Depends on how far this comes down. If we break down hard to the 165.63 level, then definitely look to 167.38 to for bearish price candles to continue with the short trend. We have this high point here, 169.72, more or less 167, which obviously needs to be watched. If we break up here and we convincingly break the 170 level, then look for a pullback into the 170 to continue the long trend. Okay, next is Aussie dollar, AUD USD. We've got an obvious spot just here, look, of resistance. Got a resistance point there, showed it again here as a resistance point, and then we bounced off this old support zone just here on this pin bar, back up. Now the last week or so, Aussie dollar has been surprisingly stagnated. It hasn't really done a lot. If you look at that price action in here, you can see that it's gone sideways. There has been no trend to speak of. So this could either, this could signify that the price is going to break quite hard in one direction or another. If we break down to the low here, 92.29, 0.9229, then look for price action candles to bring us back up here. If it breaks down really hard to 95.13, then there is a possibility of long position just there, depending upon the price action. If we get up to this level here, 94.313, which is the old resistance spot just here, then watch the candles very, very carefully to confirm a reversal again. Depending upon how hard it breaks. If it breaks quite hard towards this level, then I would expect that it may break and continue with this trend, this underlying trend. If it does break this level, then you should trade it after a break and a pullback and a price action candle to show you that this isn't a false breakout and it's going to continue on. So Kiwi, NZD, USD, another one stuck in the range, a bit similar to Aussie. It's moved a little bit last week, but nothing major. You can see the levels here: 87.80, 85.37, 83.81. Now if we come down here to the 85.37 spot or 85.33 spot, look for some bullish candles to take us back up here to 87.80. The 87.80 level may prove quite a hard nut to crack because it's very, very high for this pair. So if you see a bullish break of this level, then you've got to trade it with a pullback to continue with the long. If we get up to here and we see a bearish candle, a nice bearish candle, then look to be trading that back down to 85.37 if you can. But at the moment, Kiwi is not trending so much. It's just stuck in a range. AUD NZD here. As you can see, it's getting up reasonably close, about 50 pips away from this resistance zone here. You can see it's a resistance zone here. I'll just put some levels on here for those of you that may be new to this. You can see here it's an obvious strong resistance zone, the 1.0891 level, pretty much 1.09, because of the amount of times it's tried to get through it and failed. So if we see a decent bearish candle and the price hits this level here, then that's going to be, a short position. If it decides that it is going to break it, then you're going to be looking to trade this old area, this old resistance area, as a support area. So if the price breaks it, comes back down and then bounces, that's when you look for your bullish candle. You don't look for the bullish candle on the first break. You let the price action show you. So you wait for the break, pull back, and then the bullish candle for continuation. There is kind of a small level here, possibly around here. You can see here it had support, and then that turned into resistance and resistance just there. So if this is kind of a long trend and it pulls back down to here, the 1.0723 level, then look for your price action at that level to trade back up to this previous high. Obviously if it pulls back all the way down to here, the 1.0545, then this is what you call a strong supporting area, because you can see that by the candles. You had a pin bar here, bullish pin bar here, and a bullish pin bar here. So basically it hit this level and the price went you're going back up, and then when it did it again, history repeated itself and it went back up to exactly the same spot. So the levels to watch are 1.0891, or if we get a massive pull down on this, 1.0545. Okay, here's the EUR JPY. You can see here we had this this level here, resistance, then became support and support here, and the support level here, 139.40, hasn't held. It's broken under here, and the price tried to get back over it here, and it's failed. Now what we're looking for is a couple of things here. Either the price drops to 136.50, in which case we'd be looking for a retracement bullish candle, bring us back up to this zone here, or we'd be looking for a bit more of a pull down here, and then a small retracement back up to this level to go short. So let me just put that level on there. It's in the other levels. Obviously you've got this level here at 143.325. This is obviously a resistance spot just here, judging on the previous price action. Don't think it's going to get up that high this week, but if it does, then obviously look for a bearish candlestick to come back down. The trend looks like it was long. Looking at this big move up here, but it's now started into a consolidation phase. So if we go back up here and we see a break over at 143.32, then as usual trade it with a break and then a pullback and a bullish candle to get long from this level. Other than that, it's a bearish candle under 143, or on a pullback to 139.40, a bearish candle there, or a bullish candle at 136.50. EURNZD here, similar to the Euro USD, broke its level a couple of days ago, but it has shown a small sign of pulling back. So if this zone here, which is 158.42, is going to hold, we're going to need some sort of bullish engulfing candle out of this level to show us, price action, or let the price action show us that we are actually going back to this level at 161. If we break under here, then look for a break. It's showing showing signs of a downtrend here. So if we break under here, look for a break and then a pullback to get short under here down to the 154.65 level. But at the moment this one looks like it's kind of following the Euro USD, so just be careful of this at the moment. Wait till you see a decent bullish candle here to take this for a long on this daily chart. Obviously if we push hard on this pair back up to the 161.80 level, then judging by the previous price action when it got to this level, you see this candlestick here pulled down quite hard from it. We see some bearish price action here. If we get up to here, then look to trade that level there short back down to the 158.42 level where we are now. EURAUD, again another pair that looks to be controlled by the euro somewhat. We had this level here 146.56, which was broken, and if you look at the candles here, the price has tried to get back over the level to possibly trade back up to the 150 area, and it's failed so far. So if we're going to get short on this pair, you're going to have to look for a bit of a further drop here, possibly a bearish candle in here. We've had the pullback more or less, so a bearish candle in here, or a bit of a drop down, then a pullback, then a bearish candle to trade it down to 141.21. Obviously if we break back over here, my favourite for this will be short out the 150.57 area just here to come back down here. It gives us a bigger scope to get some downward price action. But as I said, this one looks again similar to the EURNZD to be controlled by the euro right now. So got to be a little bit careful with this one as well. Just watch your price action around this level. And if we get a quick drop and it pulls back, then look for a bearish candle at this point here to come back down short to 141.29. Obviously if we get a massive pull up to the 154.55 level, you can see this is quite strong resistance. So at that point you'd be looking for a bearish candle as well, to trade back down to here, and then in extension down to these levels here. AED JPY, this is quite an interesting one here. We've got these previous levels here. Let me just mark these up. Previous resistance areas just here and here, a bit here as well, and then the price is broken straight through it here, and then it's gone into a bit of a sideways movement. So for this one, ideally I'm looking to go long at 93.85, somewhere in here. If we get down to this particular level, then this previous resistance here will turn into support. Look for a bullish candle to signal more of this upside movement. We've also got that level there at 96.073, pretty much 96, to watch. If we don't get the move down to here, then look for a decent bearish candlestick here to trade it back down to here. If it breaks this level, then look for the break, then the pullback, and then a bullish candle to keep going with this trend. There's a small level, let me just have a look at this, just there possibly, but there isn't really anything else apart from that level. So that's just a level to be wary of. If you look at this candlestick here, this is a bullish pin bar, bullish hammer, and out of that level it came down to here, look, and it went up, and then it's hit it, given us this bullish hammer, and it's moved back up. So might be worthwhile paying attention to 94.52 as well for some bullish candlesticks. So that concludes our daily price action trading analysis for the week 19th to the 23rd of May. Hope everyone finds this useful, and have a great week trading.